So we were talking about job growth, but RealPage, they have a piece out saying they're saying that job growth is no longer the chief predictor of apartment rent growth. Again, this comes back to there's a lot of different variables. Which are the ones? How are you weighting these variables? Some are consistent. Supply was much more steady a couple of years ago, but and the changes might be, a new business is bringing in a couple thousand jobs to a market that has a much broader impact, an immediate impact to the rent growth and what kind of apartments. And now we need a fancy apartments, we're going to have higher rents. But RealPage is saying, employment growth may not be the only thing you should look at.
Yeah. This was interesting. It does give us an information, like kind of a retrospective look at how job growth has predicted or not predicted rent growth in the past, and what it's like now. Time was you get 10% rent or job growth, and you may see above 10% rent growth, maybe even 20%. They've got the chart there, and it looks like you're growing rent growth a little bit stronger than the cumulative job growth. However, when it comes to apartment supply, I'm not sure if they're controlling that here. I think that they are, and I'm gonna have to contact the authors here. But that was my first reaction when I read this. Is yeah, of course, job growth's not the chief predictor. It's been apartment supply. The whole story of the apartment market. We've built so much where it doesn't even matter if it doesn't even matter what your job. We've overbuilt the prospects of jobs. That is, it was everything. The primacy of apartment supply is nothing that I really even need to remind everyone about.
But going just looking at the chart that we just looked at, I mean, again, it's correlation is a causation, but I'll do a correlation causation. I mean, we had incredible amount of job growth, in 2021. Well, that pairs really well with a lot of rent growth, and it's not like we saw supply decline during that period. We had supply starting to ramp up. I'm saying that it all matters. It's just, to certain degrees, and there are certain thresholds where one variable can overtake the other.
Yeah.
I mean, I could also say I'm going to correlate war zones with rent growth. Wars, it's not employment growth. If you've got a war, in your market, that's going to be a bigger issue. But
and household growth,
But we don't worry about, which submarkets are going to be in conflict with each other in the United States because it's a non-issue.
Yeah.
Okay, it's an extreme example, but in the
past,
that's
true.
Supply,
that's a good point.
Supply was relatively
issues.
Exactly. The supply was stable, so it was a variable that didn't have a big impact. It's just you go back to if you've seen the movie Margin Call, and they're packaging up all of these mortgages to bake into these mortgage-backed securities, and they could do it because the volatility was within a certain range. And they're like, it was fine. Vol was low. We could get these. We have these crappy mortgages on our books for a month, but volatility is so low, the prices don't change that much. It gives us time to package them up and kick them out the door. They never anticipated the volatility that could swing as widely. So all of a sudden, where volatility was something that we're aware of, but we're not really focused on it because it's just within a bounds. It's outside that bounds. It throws the whole system off.
That's what I was thinking.
And I think that's more of what's happening here. And it's RealPage and it's all the other folks that are writing articles. They weren't right. I mean, certainly we were always looking at supply or considering supply, but the articles that are driving the narrative are more on unemployment, not on supply, and I think there's a little bit of catch up. And because people are asking, they've told, not calling out anyone or any publication, but they've been telling everyone for the last decade to just follow the jobs and specifically follow the jobs to Austin, Texas. And everyone did that. But it's not working. Hey, so Matt, I'm at a stopping point. I've got a meeting that I have to hop onto right now. I've got a really important interview. So everyone, you're in really good hands.
I really want to say my piece too.
Matt has, I often derail Matt's notes and his thoughts, and then I take it to a different direction, and Matt's like, I've got something I really thought about. So Matt, the floor is yours.
All right.
And we do have a new investment opportunity, Walcott Apartments for accredited investors down in Jeffersonville, Indiana. Schedule a meeting, greatcapitalllc.com or Walcott Invest. Hop on a call with you, tell you about the new deal. It's exciting.
Yeah.
Okay.
All right.
Thanks, everybody.
Yeah, just to close out this discussion of RealPage and a couple more things I wanted to note here. So yes, RealPage does posit that that job growth is not the only factor when it comes to rent growth. I think that I think that we both know that, and I think that it has, this is a different time period in which apartment supply has become just like everything when it comes to the apartment market for the past few years. However, I also think it would be interesting to know if they do factor in supply growth, and they're like, well, for apartments with the same amount of supply growth, how does job growth correlate with rent growth? And I still think that it may become unmoored. I think that there is a point where you crank, and Spencer was kind of saying this in so many words as well. There is a phase that you get in, a different kind of environment in which if a supply is up here, then the normal rules may not apply. Maybe if you're adding like 5% or 10% to apartment supply every year, that then the rules for rent growth are different when it comes to jobs compared to if apartment supply was increasing by like 2 or 3% every year. I just think that, and the same thing for rent growth. Rent growth was super high in 2021. Then in that way, there may be a different like motivation for people to get an apartment or not. I know in this article, it talks about remote work. It says, in a post-pandemic world where employees, especially highly educated, high-earning employees, are more likely to work remotely, a given market's job gains might be irrelevant to where those employees choose to live. I do think that remote work may be a factor, but I also wonder if we're just kind of in uncharted territory where like the physics doesn't work when temperatures are this high or something like that, where, supply had been historically high, and that makes rents a little bit of uncertainty. Maybe it doesn't matter as much where you live if all of the markets just have a glut of apartments. So I just think that in these highs and lows, which we've experienced for the past few years, that might throw the numbers off. However, I think that it doesn't mean that jobs aren't a predictor of rent growth. I think that job gains we've looked at household growth, look at population growth, and that's really important to look at, not only on a market level, but on a sub-market level where you're close to and where those jobs are. So that's the RealPage article.